Hey everyone, and welcome back to TalkTickers.
Today, we're going to be diving deep into NextEra Energy's Q3 2024 earnings call.
And get this, power demand.
It's projected to explode like 6 times over the next 20 years.
Yeah.
So we're going to unpack how NextEra is responding to this absolutely incredible surge.
We'll talk about some massive new deals they've made, and we'll also get into some pretty surprising insights on nuclear and the future of energy.
It is a very dynamic time for the energy sector, that's for sure.
It is.
And NextEra seems to be right at the heart of it.
Yeah, and I think one thing that really drives this home,
We got to start with Hurricanes Helene and Milton.
these back-to-back hurricanes that just slammed Florida.
Right.
And NextEra's subsidiary, Florida Power and Light, had to deal with nearly 3 million customers losing power.
Yeah, it was a real test of their infrastructure.
And they show they were prepared.
I mean, they had over 30,000 people out there, as part of their restoration workforce.
Wow.
And they're using smart grid technology to prevent even more outages.
What's even more impressive is that they reported minimal damage to their solar infrastructure.
Less than 0.05% of their 16 million solar panels were impacted.
That's incredible. I mean,
Yeah.
That's a powerful demonstration of their commitment to that resilient grid.
And it's this experience, they have this thing, they call it the Florida playbook.
And that's what they're applying to this nationwide surge in power demand.
Right, and they've been integrating renewables and storage in Florida for years now.
And it's proven that new wind can be up to 60% cheaper than new gas.
Wow.
And solar up to 40% cheaper, especially when you add battery storage into the mix.
So they're basically saying, look, we've already figured this out in Florida.
And now we're just going to scale it up.
Exactly.
And, I mean, their track record really does speak for itself.
Florida Power and Light already has the largest utility-owned solar portfolio in the U.S.
And, the CEO, he actually highlighted that we're facing an energy demand boom unlike anything we've seen in 80 years.
What does that actually mean for us, though?
On a day-to-day basis, what does that look like?
Well, think about this.
By 2030, data centers alone
Are predicted to add 460 terawatt hours of electricity demand.
Wow.
That's a massive amount of power.
And it could lead to higher energy prices
Huh.
and even impact U.S. competitiveness globally.
So it's not just about keeping the lights on.
It's about affordability.
It's about our position on the world stage.
Absolutely.
And NextEra is leaning into this opportunity big time.
I mean, this earnings call,
It was packed with announcements about some huge wins they've had.
like what?
Well, for instance, they've added 3 gigawatts to their backlog for 2 consecutive quarters now.
Bringing their Q4 running total to a whopping 11 gigawatts.
That's impressive.
But I have a feeling there's more.
Oh, you bet there is.
They've also secured framework agreements with 2 Fortune 50 companies.
For potentially 10.5 gigawatts of renewables and storage.
By 2030,
And if you add that to the energy deal they made last quarter.
that's a potential 15 gigawatts of new projects,
Wow, so that really shows they're serious about this.
about leading this energy transition.
But what about nuclear and gas?
Where do those fit in?
That's a great question.
They actually have an interesting take on that.
They believe nuclear will have a part to play.
But recommissioning existing plants just won't meet that massive demand growth.
And nuclear, it's just too slow and expensive.
So where does that leave gas then?
Well, they do see the need for more gas plants in the short term.
But their focus really is on batteries.
Okay.
They argue that batteries are ready now,
They can be built right next to renewable energy sources.
and they avoid those long permitting processes that often hold up gas plant construction
So it sounds like batteries are a big part of their strategy.
for dealing with this rapid increase in demand.
Exactly.
They see batteries as a key piece of the puzzle.
Especially when it comes to grid reliability and resilience.
This is all painting a pretty exciting picture.
Of NextEra's role in the future of energy.
It really is.
They're not just talking the talk, they're walking the walk.
Yeah, they are.
But before we get too carried away.
Let's talk about their yield code NextEra Energy Partners.
Oh, yes, NEP.
They've had some interesting developments this quarter
They declared a quarterly distribution increase.
and announced more wind repowering projects.
But
There's always a but, isn't there?
while NextEra is currently reviewing NEP's financial strategy,
Okay.
and there's some uncertainty about whether they'll stick with high distributions.
Or shift to a model that prioritizes faster cash flow growth.
We should get more clarity on that in the next earnings call.
Okay, so a bit of a cliffhanger there.
Stay tuned, folks.
We'll delve into the financials and those intriguing framework agreements in part 2, coming up after a quick break.
Welcome back to TalkTickers.
We're continuing our deep dive into NextEra Energy's Q3 2024 earnings call.
Before the break.
We talk about their impressive growth.
And how they're tackling that massive increase in power demand.
But let's get into the nitty-gritty.
How did they actually perform financially this quarter?
They had another solid quarter.
Reporting adjusted earnings per share of $1.03.
A 10% increase year over year.
Okay, so double-digit growth.
That's definitely something to celebrate.
What were the key drivers behind those strong earnings?
Both of their subsidiaries.
Florida Power and Light and NextEra Energy Resources.
Both played a role.
Florida Power and Light saw a 9.5% increase in regulatory capital employed,
Which is basically the amount of money they have invested in their infrastructure.
while NextEra Energy Resources, their renewable energy arm,
Enjoyed an 11% jump in adjusted earnings.
so steady growth on both sides of the business.
But hold on.
Didn't they have some significant expenses?
Related to those hurricanes we talked about.
How did that impact their bottom line?
You're right.
Those hurricanes were costly.
They estimate the total restoration costs for hurricanes Debbie, Helene, and Milton.
To be around $1.2 billion.
Wow.
However,
NextEra has a system in place to handle these kinds of events
they have a storm reserve.
and a surcharge mechanism that allows them to recoup these costs through customer bills over time.
So they're not just taking a financial hit every time a hurricane rolls through.
Exactly.
They've learned from past experiences.
And have a robust financial strategy to manage these unpredictable weather events.
Okay, that makes sense.
Now let's shift gears and talk more about those framework agreements.
With the Fortune 50 companies.
Yes, those massive deals.
They're still shrouded in a bit of mystery.
But what can I tell you about them?
Any hints about who these mystery partners might be? Well, they haven't revealed any names.
They did say that these companies are not from the technology sector.
Oh, interesting.
So it really emphasizes that this energy transition,
It's happening across the board.
yeah, and these agreements represent a potential 10.5 gigawatts of renewable energy projects.
By 2030.
That's huge.
That is huge.
What can you tell us about the structure of these deals?
Well, most of these deals will likely be structured as power purchase agreements.
Or PPA.
For those of us who aren't energy finance experts.
Can you explain what a PPA is?
And why it matters. A PPA is basically a long-term contract
Where a company agrees to buy a certain amount of electricity,
from a renewable energy developer.
like NextEra,
This gives the developer a guaranteed revenue stream.
making it easier to get financing and build the project.
Gotcha.
So it's a win-win.
The company gets clean energy at a predictable price.
And NextEra gets to build more renewable projects.
Exactly.
It's a great example of how the energy transition is creating new business models and opportunities.
These framework agreements signal a major shift in how corporations are buying energy.
With more and more companies seeking long-term sustainable solutions.
This all sounds very promising for NextEra.
They're weathering hurricanes,
Signing huge deals.
and their stock price is doing well.
But are there any challenges or risks on the horizon?
There are always challenges.
One potential hurdle is the regulatory landscape surrounding energy infrastructure. Permitting processes for new transmission lines and renewable energy projects,
Can be slow and complicated.
which can delay projects and add costs.
The dreaded red tape. NextEra is actively involved in policy discussions.
And working with various stakeholders to try to streamline these processes.
But it's a constant battle.
Okay, so regulatory hurdles are one challenge.
Anything else that could impact NextEra's future success?
Another factor to consider is the increasing competition in the renewable energy sector.
As renewables become more mainstream,
We're seeing more players enter the market.
from traditional utilities,
To oil and gas companies looking to diversify.
this could put pressure on prices and profit margins.
So it's a competitive landscape out there.
How is NextEra planning to stay ahead of the curve?
That's where their size and technological expertise come in.
They have a massive development pipeline,
They've secured prime locations for wind and solar projects.
and they're constantly innovating to drive down costs and improve efficiency.
So they're not resting on their laurels.
They're staying proactive.
Absolutely.
They understand that the energy landscape is dynamic.
And they're adapting their strategies to maintain their leading position.
But it's not just about building more wind and solar farms,
They're also investing heavily in grid modernization and energy storage.
which are critical for integrating renewables into the grid smoothly and ensuring reliability.
That's a great point.
We often focus on the new renewable projects.
But the infrastructure behind the scenes is just as important.
It is.
Think of it like building a house.
You need a solid foundation to support all the fancy features.
Okay, so NextEra is facing some challenges.
But they also have a lot of strengths and strategies in place.
To overcome them,
What's a bottom line for investors?
what should they be watching for in the coming quarters?
Well, investors should keep an eye on a few key things.
The growth of their backlog,
How they execute those framework agreements.
and their progress on grid modernization and energy storage projects.
Growth, execution, and innovation.
Those are the key takeaways.
Exactly.
NextEra needs to show that they can continue to turn their pipeline of projects into operating assets
Navigate the regulatory landscape effectively.
and stay ahead of the competition in this rapidly changing market.
This has been a really insightful look at NextEra Energy's Q3 performance.
And their vision for the future.
But there's still one big question we need to address.
The future of NextEra Energy Partners.
Yes, the YieldCo and the mystery surrounding their financial strategy review.
We'll tackle that in part 3, coming up right after this.
Welcome back to TalkTickers.
For the final part of our NextEra Energy deep dive.
We've covered a lot of ground.
But there's one last piece of the puzzle we need to examine.
NextEra Energy Partners,
Right.
or NEP.
It's been the elephant in the room throughout this earnings call.
There's been a lot of speculation about NEP's future direction.
Okay, let's get right to it.
What's the latest on their financial strategy review?
Well, NextEra has been pretty tight-lipped about the specifics so far.
They've said they'll share more details during NEP's next earnings call.
But that leaves investors kind of hanging for now.
Yeah.
So what's the big question here?
The big question is, will they stick with their current model?
Which focuses on high distributions to investors.
Or will they shift gears and prioritize faster cash flow growth,
So two very different paths.
with potentially big implications for investors?
What are the pros and cons of each approach?
Well, if they stick with the high distribution model,
It'll be attractive to investors who are looking for that steady income stream.
but it could limit NEP's ability to invest in new projects and grow at the same pace as NextEra Energy itself,
It's a classic trade-off.
between short-term rewards and long-term growth potential.
Exactly.
On the other hand,
If they decide to prioritize cash flow growth,
they'll have more capital available to acquire new assets and pursue organic growth opportunities,
so it's almost like choosing.
between a dividend stock and a growth stock.
They both have their merits.
But they appeal to different types of investors.
So that's a great analogy.
And this strategic decision could really significantly impact which investors are most interested in NEP.
So a lot of uncertainty still surrounding NEP.
But let's zoom out a bit.
What does NextEra's overall performance and strategy tell us about the broader energy transition?
It's underway.
I think it tells us that the transition is accelerating rapidly.
And companies like NextEra are at the forefront of this change.
They're proving that renewable energy isn't just an environmental imperative.
It's also a smart business strategy.
It's a great example of doing well by doing good.
NextEra is demonstrating that a clean energy future is not only possible,
It's also profitable.
and they're doing it strategically.
Investing in a diverse portfolio of renewables,
transmission.
all while navigating that complex regulatory environment.
It's not just about building wind turbines and solar panels.
It's about creating a comprehensive, resilient, and sustainable energy system for the future.
Exactly.
NextEra's success is a testament to their long-term vision and their ability to execute.
They're proving that the clean energy revolution is happening now.
Well, that brings us to the end of our deep dive into NextEra Energy's Q3 2024 earnings call. We've covered a lot, from hurricanes to megawatts to the YieldCo drama with NEP.
And we've seen how this one company's story really reflects a fundamental shift in how the world is being powered.
Absolutely.
So I hope this deep dive has given you a clearer picture of where the energy sector is heading.
And if you want to hear more insights about earnings calls and the future of different industries,
Be sure to subscribe to TalkTickers.
until next time, stay curious and keep investing in knowledge.